If there was a holy grail of investment properties, then it would definitely be a property with incredible long-term and medium-term potential for capital growth, great cash flow, and really strong tax benefits. Like the holy grail, finding a property with all three of those things in one property is extremely elusive and something that most investors will chase for their entire life. But in today's video, I'm going to take you on a quest and I'm going to show you exactly how to create this type of property in your portfolio for affordable prices in Australia right now. We're looking for a property that has great potential for growth, great cash flow, and great tax benefits. So the idea is we go out there and buy a nice big 500 plus square meter piece of land in an established quality suburb. Now the simple idea behind this investment strategy is we go out there and buy a nice big 500 plus square meter piece of vacant land. We then work with the local builders and town planners to design something super special, which would be like a 3 or 4 bedroom house at the front with a 1 or 2 bedroom granny flat at the back. And the idea is that after we've completed the build, we're in an area with great potential for growth. We're getting 2 incomes instead of 1 on a brand new property, so the maximum amount of income we possibly can. And then we get our tax depreciation report, which we give to our accountant, and we get a huge amount of tax benefits at the end of the financial year. Now, in terms of breaking down these 3 components, I'll start with capital growth. Now, when looking for a property that's got great potential for capital growth, we have to go and understand history. Now, what's worked in Australia over the last 100 years is super simple. We want houses close to Australia's major metro or major regional markets, close to the city around that area or the beach. And then on top of that, there's all of the littler things as well. Close to transport, good schools, universities, hospitals, jobs, and a unique lifestyle. Now let's just, for today's example, say that we go out there and buy $1 million property and we decide to hold that property for either 15 or 30 years into the future. Now, if we hold that property for the next 15 years and it goes up by just 5% per annum, that $1 million beautiful brand new house with a granny flat is going to be worth $2 million. Now, if we hold it for 30 years, it's actually going to be worth $4 million, which is not just going to produce incredible long-term financial security and peace, but also produce an incredible passive income for life and great tax benefits. Now, if we move into the second most important part of this strategy, it's cash flow. Because you're getting 2 incomes on this property instead of just 1, obviously the cash flow position is significantly better, which means as interest rates go up, you can afford to hold the property for longer without the fear of losing it or being forced to sell it at the wrong time. But it may also start to spray off a passive income as interest rates begin to come back down. The rent on the property increases over time and the debt position as you chip away at that over time comes down as well. Now, the third benefit of this strategy is the tax benefits. Now, if you're in a financial position where you can go out there and execute something like this for $500,000 to $1.5 million, depending on the market in Australia you're targeting, then I'm assuming that you're paying a whole bunch of tax, which is a great thing because it means you're earning money. So with this particular property in Australia at the moment, according to my accountant and tax depreciation specialist at the time of recording this video, you can get incredible tax incentives in Australia, which is the result of negative gearing and tax depreciation schedules on a brand new investment property. Now, I've recently helped a whole bunch of clients do this for themselves as well as myself, and on a $500,000 property, I should be saving at least for the first 5 years somewhere between $10,000 and $15,000 per year in tax. And then as the depreciation goes over the years, whether it's a 30 or a 40-year depreciation schedule, I should be saving at least $5,000 to $7,500 per year over that entire 30 to 40-year period. Now, obviously with anything that seems to be too good to be true, go and talk to your accountant about the way that tax depreciation works and the effect of it when you actually sell the property in the future. But it's a very, very, very strong reason why I like brand new property at the moment myself. If you're thinking about buying an investment property in the next 3 to 6 months, then the team and I at Pumped On Property would love to offer you a one-on-one strategy session. To book the session, all you have to do is go to www.pumpedonproperty.com and click that free strategy session button. Now, in the session, we'll talk about exactly where you are right now, We'd like to be longer term and educate you deeply on the Australian property market. You can then take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each month. Either way, we look forward to continuing to help you build your property portfolio with confidence on your journey to financial freedom.